Well, good evening, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up. And this wrap-up is for Tuesday, the 2nd of January, 2024. I'm exceptionally late. Had a screw-up with the computer. It's 7:55 p.m., but I felt that rather than skip this, I'll do it for you, and I hope you appreciate that. I've only been up since 4 in the morning, so it's a long day for me. And that's what time I get up all the time. All right, before I get too far, let's take advantage, if you want, on my New Year sale. 40% off any yearly research purchase. For new subscribers and for those of you that already have a monthly service where you just roll month to month, you can go there. I'm not honoring it if you have a 1-year service already to say the spiders and you want to roll that up and you want to go to the full research. No. It can't go year to year. It can go brand new or rolling up your monthly. You get everything 40 off. You don't get this very often. There's no other holidays coming for a long time, folks. So the next time you might get this could be when? July 4th? If you're looking to take advantage, a great time. Move your cursor to the top here. It'll take you there. If you see an icon, iraepstein.com under the word research, go there. Now, before I get too far, let's take a look at something else. The January effect. In stocks, you hear about this all the time, and people go, oh, as goes January, so goes the market. Total nonsense. I don't know whoever came up with that, but it's not factual, okay? Since 1993, there have been 17 winning January months, which is just about 57%. That's true. 2023, 43% lost. And if you go to 2009, when this bull market rally began, remember the Great Recession and the end of the earth was 2008-9? Well, when that began, you have a 50-50 split since then. So that is not true. But there is truth to one other. If you add the month of February, things change a little bit. I write about that in tonight's report. I don't give everything out here, all right? This is the feeder into my research, so hope you appreciate that. Now, when we look at BYD, you just filled a gap in the chart. Charts like to fill gaps. This market had fallen apart. There's still gaps above it. And BYD is one of these markets that often has gaps. So the comment that I make, charts don't like to leave gaps, that's on normal markets. But you're trading an ADR here out of China. You get mixed information. The chart does that. Just accept the fact of what it is and understand not all charts trade the same way or look the same way. The pattern here is bullish. You have higher lows, certainly a higher high. Nothing changes where the support comes in. I'm looking at 53.25. What you don't want to see taken out if you're going to hold the bull pattern is to take out 5,200. The market got up to the Bollinger Band and kaboom, it ran out of momentum. As it should, and as I teach here, over and over, year upon year. That is where you should have run out of steam. You were overbought, you ran there. The pros are out of the market. They might reestablish at 53.25, risking back maybe just under the 52 level. Rivian missed its numbers. Plain, simple. As much as I like their commercial business, the commercial van business, which I think is phenomenal, and I think that's their big winner, I have doubts, serious doubts that they're going to crack in and stay where they should in the truck part, the regular pickup truck part, and when they come out with their other cars. We'll see. They missed numbers. That isn't a very good thing, and they got punished for it today in a big way. Gasoline. I am bearish. Gas, heating oil, crude, and you'll say why. We just saw an Iranian ship go into the Red Sea to do what? Who knows? What mischief? Probably more symbolism than anything else to tell the Houthis, yes, you keep firing out of there. We've got our ship in the region. Now, can you imagine a warship from Iran taking on a U.S. carrier group? We're talking submarines, destroyers, all kinds of ships, helicopters, jet planes. It isn't going to happen. They're there to look for it. Could accidents happen? Yes, just the way the U.S. and the Chinese have been going in the South China Seas. That's been going on for years. You see it all the time. Anything can happen. What makes it more dangerous is everybody's got an itchy finger against Iran because the world believes that Iran is the cause of the Mideast war in terms of they give the arms, the funds and the money to go against Israel. That is what the world believes, and obviously we're the Western world, and there's that belief. Does that enough to start a war with them? I doubt it. They'd have to do it. If they initiate, they'll sink the ship. The U.S., the other allies will sink their ships. When you take a look at what's going on in XLF, well, you're trying to say this market's going to be good. Today I was telling traders that I thought the buy zone came in around the 37.49 level. You hit 43, and unless you take out today's lows, and that would be where I would not want to own it again if the market takes out today's lows, barring that, you still could get up to the 38 level again. In the industrial sector, what I haven't understood, and I'm sure you're going to teach this to me, I don't mean that facetiously, I haven't seen any of our industrial numbers good. I've said this to you over and over. Empire State, the Fed, Richmond area. I can go to our Chicago area. It's one after the other. Where's the strong industry? This is a bet on the come, not the reality, is what scares me about that. AMC could be now a stock that has to gyrate around the $6 mark. It used to be $7. They have no good movies. Wonka is not a savior for the movie industry at the month of at Christmas time. I know you might think so. I don't, and I own the movie theater. I know more than most of you. That won't do it. And what you got to count on is the first quarter, there are going to be some big releases. We need Dune. We need other things that have a following. But will they be blockbusters? Doubtful. I don't think you're going into big trouble, but you're in trouble. You've got a bearish embedded reading. You're still in the bear camp. You could be going to 581 in this market. In the S&P, the weighted consumer discretion. Be careful here. When you reopen in the morning, you're probably going to lose the embedded reading. That red line might get under 79. You could be headed back to 46, 78 here to regroup. Same happening in the home builders. And I like the home builders, but I think they're going to be under the gun tomorrow. Unless you get a Tuesday, well, let's call it this way, a Wednesday reversal because we were closed on Monday. Normally we'd say a Tuesday reversal, but it is Tuesday. So if you get a flip-flop, fine. The market's going to be under pressure from the get-go, in my opinion. We'll see what happens there, and I'll be talking to you about it in the morning video. In the energy sector, higher high, lower low. As I said, I'm not in love with this sector right now. I can see more coming onto the market. In the gold market, you had an outside day to the downside. You're overbought. You've already hit the objective of the upper Bollinger Band. There could be more downside to the 188.58 level. The dollar rallied today. Interest rates went up, real rates. That's gold's enemy. Now, tomorrow we're going to get the JOLTS report. Then we get ADP. We get the Challenger Gray. And on Friday, we're going to get the U.S. jobs report. Okay? Are these going to be strong or weak numbers? Did the market get ahead of itself rallying? All of November and December. Is a correction and a consolidation needed? Let me answer that. Yes. Really simple. SLV, losing ground here. Now, you're into your first support of the 18-day average in the 200. If that gives ground, the next level of support, 2130, the 100-day average, culminating with bigger support at 2096. Copper market giving up ground. And this is with China throwing billions of yuan into their new programs to go into the big cities and build infrastructure and grids, okay? New housing. And yet, copper sinking back over that. That news was released this morning by the People's Bank of China. You're getting your correction in TLT. You lost the embedded reading. The odds are super strong. You're going to come down and challenge these numbers before you go back up for the high. Same in BND, by the way. And in the dollar, a big bounce. You're still embedded. If the red line closes over 21, if that happens, you could get back up here. If not, it's just a bear market rally. Let it play itself out. FXE, the big support starts right here. You lost your embedded reading. If it's any good, it starts finding the support in that general area. One more time for you, the sale. Right now, through Friday, gives you like 72 hours to take advantage. IraEpstein.com, the word research, or just give your click there. I'll catch you in the morning.